that I took today on euro dollar. The forecast was a bearish day, so I did take shorts as a result of that. And this was a trade, but what I want to do actually with you is walk you through exactly bar by bar what I was looking at. So on the forecast, I had marked out, let me just delete this. I had marked out the hourly, and check out the forecast if you haven't. It's the last video I did. So I had this hour fair value gap, which no one can see, something like that. So I was looking for price to tap into this and carry on down. Dropping onto the 15 minute, I said in the forecast that I want the Asian high to be taken, and only then am I going to take a trade. Now, there was actually a setup over here, but it was a loss, and the Asian high was not taken out. Liquidity was not swept. So if I drop down to the 5 minute, I believe, yeah, you can see it on the 5 minute. So the Asian high, which is right there, we didn't sweep it. We came down, broke structure right there, had a massive fair value gap. So everything was actually ticked off. There's also an inverse fair value gap, a disrespect of a fair value gap, which shows more bearish signs. But what did we do? We swept liquidity right there, came up, swept the Asian high, and only then are we interested in trading. So tapped into here, the hourly fair value gap. I was thinking we could get a reaction, but we didn't. We swept up, kept going up, and then we eventually got our break in market structure. So the fair value gap, we basically just went through it, but we did react to something. But what did we react to, you might be asking? We reacted perfectly to this M15 fair value gap. A 15-minute fair... All my colors are... I'll make it blue. We reacted to this M15 fair value gap, dropping down to the 5 minute and the 4 minute. I believe there was an entry. Yep, I entered on the 4 minute, so above the opening price, all those good things, confluences, break of structure right there. And if you actually zoom in, you could see that it was with a body, just about. So I took it. Plus, this whole leg down is showing me some sort of momentum. We're seeing weakness here. Also, inverse fair value gap. We didn't. Can't speak. We didn't respect a bullish fair value gap, so it's an inverse fair value gap right there. What else? We were showing weakness around here, a lot of wick rejection, not really pushing through the fair value gap. Our entry fair value gap is right here. The amount of times I've said fair value gap. This entry fair value gap. Yeah, the entry was there. What else? There was also an SMT divergence, which I'll show you just in a second. So this was the entry right there. It was actually a bit higher on MT5 there. That was the entry. And 2.19 right there. And I believe if I entered at A3, I might have been stopped out. Let's see. No, I wouldn't have been stopped out. Very, very close, but the entry was at 8.5. So that was the entry. We got triggered in, came up really close, around 0.8 pips away from the stop loss, but we didn't take it. That's why maybe having a 10 pip stop loss can, help with your psychology. But yeah, that's what it was. And then I went to the gym. I was like, I'm not watching this. Came down, went up again, and then just plummeted. And the news took it even further down. So my overall target, I doubt we're going to go that far, but this the Asian low. And obviously the drawn liquidity is somewhere down there. So that was the trade. Now the SMT divergence I want to show you. So if we look, I'm just going to make everything clean right there. I'll delete all of the fluff. Okay. So right there. Okay. So if we look at this, and I'm actually going to just compare. Okay, perfect. So this is how you look for an SMT. We have the DXY right there, the dollar currency index, and we have the euro dollar on the left here. So the times here is 416, as you can see at the bottom here. 416, so if we go to 416 on DXY, perfect there. So this is the SMT divergence, which is a very, very powerful confluence. So if we take this point here at 408, as you can see, From 408 to 416 and to 424, we're making a higher high. Okay, that is showing me strength in the euro dollar, strength in the euro against the dollar. Now, the euro dollar and the DXY are inversely correlated, which means that on a perfect day when everything's all well and good, as the euro dollar is going up, the DXY will be going down, and vice versa. Euro dollar is going down, DXY is going up, same thing. But when there is a crack in correlation, means that the euro dollar is going up, strengthening, but at the same time, the DXY is also strengthening, which doesn't add up, right? How can both be strengthening? That's why there is a crack in correlation known as the SMT, smart money technique, divergence, and that's exactly what we have seen here. So 408, as you can see, a higher high. This is strength, right? So at the same time, we should be seeing weakness on the DXY, but what did we see at the same time? 408 to 424, 408 right there to 424. We saw strength on the DXY as well, because there's a higher low. From this price, the low, to this price is obviously higher, right? If I remove this, what's higher, this or that? This, right? So there was strength at the same time that there was strength on the euro dollar. Doesn't make sense. Crack in correlation, SMT, which is a very strong confluence that we are going to go down. And then on the euro dollar, we had that break in market structure. So everything's adding up. So this was a very high probability trade in my trading plan. And yeah, I've already shown you the trade, but I just wanted to show you the SMT divergence. But that's the trade breakdown. Hope you got some value out of this one. And stay tuned for the Zero to Funded series, which is coming on the weekend. And like the video so this reaches more people. More people can learn about this, get some value just like you have. And I will see you guys very, very soon. Yeah, that's it. Stay safe.